The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday in market days. And what a fascinating market this is. Up, down, and everywhere. But down right now. Dow's down 120 at 7,955. S&P is down 13 at 2101. You've got the comp index down 23 at 5,075. Gold is down 10. Silver is down 33 cents. High-grade copper is down, at 2.69. Very bad. You got bonds up $1.07 ticks. Very interesting. And you've got, of course, crude oil is down with all the commodities down at 58.17. And the dollar, this is going to be really interesting. The dollar right now is down a little bit. It's down 18 cents at 95.32. All right, let's go through this one by one. First of all, oh, what great program there was today. I mean, just all the way through. And, of course, being Thursday, not only that, at the end of the day, you've got Andy Hecht. So, just a full house. Really great. So let's just go through these numbers here. Down, the S&P E-mini is down 16. You see this sharply falling X formation, that resistance line from the 2134 high back in mid-May, shows, actually this is all over right now. Let's call that peak F. That's all it is. It's a peak F, alternate count. Gets an inverted V, a little caret at the top there, right there. Okay. So what we're looking at now is that there's a sell signal to sell mode in the E-minis, and that suggests that we've got to watch the low of 2 days ago, 2094 round number low. We take that out, and a whole bunch of things start to take place. The 120-minute chart shows you, remember, we talk about the patterns. What are we looking at? We're looking at a straight line move. We're looking at the chap wave notation. And we're just looking at arches and cup formations. Right now, we've gone from a cup to an arch with a C minus failure below the peak. C1, C2, C3, C4. Had someone talking about that the other day saying, hey, doesn't it confuse things? Wow. When I came up with this concept a long time ago of the failure pattern to make a peak D, where all the technicals are suggesting that they just needed that one little penny or whatever it is to go to leg D, but it couldn't do it, that you've got to take into consideration that there was a shoulder failure pattern. Once I worked on that, you remember we used to get calls from Peter in Park City about the euro dollar, and I said, I think we've got a peak C1, C2 top here, and then whoosh, there was a pullback, started a brand new buy mode. Euro dollar did it again. Peak C1, C2 did about 3-4 times over a period of 6 or 8 months. Now let's just look at this. The pattern that we're looking at here is starting to form the lower lows and lower highs. That's the change of trend. The tide changes when you start to definitively make lower lows and lower highs. I prefer to sharply lower lows and sharply lower highs because that is defining the trend as a severe trend. At this particular point, if I go down to my chart that I show my subscribers every day, one of the reasons why we are short the Dow, why we went back to the short and added to the position is that 9-period moving average, even with yesterday's 6 low on Tuesday below the 9-period moving average, that maroon line, yesterday makes the 7th. There's a chance that we could be seeing the 8th today. That is a decisive change of trend, number one. Number two is we've got that dash red up channel line, which is being challenged right now as we speak. Number two is the MACD and stochastic. One of the reasons why even though we've got a mixed portfolio, we've got some longs and some shorts, now we've added many more shorts. And one of the reasons is that the technicals are starting to fail, even though the IWM had a very nice, let's do this one at a time. So the Dow right now is on the cusp of breaking very important support. If the Dow closes below 17,000, it's at 17,964 right now. If it closes below 17,870 in the next two sessions, that includes Friday going into Monday, not only does it say that we've got another very large arch formation forming, but it says that the 17,733 low that was made back, it was the very beginning of May, that was, the 6th of May, that's the last vestige of support before we go to the lows that were made back in March and April. It's also saying that the upside is extremely limited. Now, the day's younger. We've seen constant buys and sells within a trading range. This is a very narrow trading range, going from 18,351, the all-time high, just to 17,925. What, 400 points, 425 points? In 425 points in 1, 2, 3, 4, 5, 6, 7, 8, 9, in 13 sessions. That's almost 3 weeks. That's not very much. So at this point, we have to consider that the rotational correction is continuing and that you've got to go through each individual index as an independent unit. So let's just do this right now. Let's move that away. In fact, what I'm going to do is I will make it much smaller. So for those charts that I have notated on the 120-minute chart, you'll see them right here in the corner. And I just want to go back to right, space to the right. Let's go back to 7 so that you can see it nicely. There you go. Okay, there we go. The Dow. INDU. The Dow I just discussed, it had a trough C made 3 days ago. Yesterday confirmed the trough C. A leg C to the downside will be underneath that 17,000. What I said was 17,925 level. That will start leg C to the downside. Meantime, we're just trapped between the 9 EMA and the low of 2 days ago. Aha! Look at the weekly chart. The weekly chart has that cup formation that says that the candle that breaks out to make, in this case, it looks like it's going to be a leg E going to a peak E rather than a B. We don't know yet, but that's what I'm thinking, because the MACD is deflected low and the stochastic is back under 80%. That says that you've got to be a little bit careful here, because you've had one close under the 9 EMA. You get another ugly candle. It can't just be a little nominal close under 9 EMA of 18,053. It's got to be a decisive close somewhere on Friday into the 17,920 to the 17,880 area. That'll be a decisive close, and that'll say, wow, for the first time we can actually say that in a long time, that we've got a sell signal in the weekly chart. That's only a sell signal. That's a descriptive thing. It's when the weekly goes to a sell mode that you got to be really careful. All right. The monthly chart, so that's the weekly chart. The monthly chart, I don't even want to discuss other than to say 17,686 is the 9-period exponential moving average, and a break this month above 18,351 continuous leg G/C. All right, that's why, because, I'll have to move this. Let me move this away for a second. That's because there's a divergence between the negative MACD and the stochastic going from the 95% down to the 85% area, but 85% is still very good. On balance volume is still very good, and the price is holding beautifully. That's why I don't want to get too carried away about the monthly. Why? Because you've got the daily and the weekly. They're going to give you tons of information before you can even get to the monthly. All right, not to say I'm ignoring it. I am ignoring it as a factor right now because I have to wait for the full month to complete. Okay, so the S&P, SPX.X. There we go. SPX is way stronger than the Dow. It's only made fractionally lower. Is that 2019-18, 2000, I think it was 98, 2019-14. So it's gone to a leg B to the downside, and a leg B to the C will be at 2099.13 or lower. And so far it's held. It's been repelled by the 9-period moving average and that symmetric triangle, which just barely is broken either side I'm going to move it over there. All right. So what we're looking at is that the weekly chart inside track, Chapman wave inside track, green support line has holding so far. The S&P becomes very negative, not if it breaks into, whoops, didn't mean to do that. Not if it breaks into the by next week, 20.089 to 20.085 level. No, only if it decisively takes out that uptrend support line, up channel support line that closes in the 2074 area between now and 2 weeks time. So tomorrow a week is okay, but tomorrow 2 weeks, that's very different. Starts to break that, you've got that candle from the 8th of May that takes it down to 2067. That's going to be the target. Let's do one thing at a time. On the upside, on both the Dow and the S&P, a break to a new high just says, hey, you are crazy. There's no other place to be but in stocks. You've got to keep buying stocks because that's been the theme for 6 years. I think this is the first time that we're looking at a rotation that is starting to take in areas that were outstanding that are actually not outstanding anymore. And there are a couple of IPOs that are doing very well right now because that's where money managers are forced to go. IWM right now had a beautiful breakout yesterday, holding okay. It's down 59 cents, only down 47%, 0.47%. And above the 9-period moving average of 12469. So the IWM was one of the strongest, then it was one of the weakest, making the Chapman wave leg body. I don't know if it's going to make the neck above 127.13. That's going to be key. At this particular point, it's not really far away. It's just 2 points that could do that very quickly. It was a lovely breakout yesterday, but you know what? It went to D in the Chapman wave methodology. D's are where you've got to be careful. QQQ series, QQQ. Didn't tell you where the support level will be. Let me finish up one at a time. IBB. I do not want to digress just yet. The IBB starts to become negative on the daily chart, not the weekly chart, if it takes out on the downside at 125.11 down 65. If it takes out 124.60 to 124.40. Now let's go to 124.20. If it starts to trade under 124 by Wednesday of next week, be very careful because this support level in the symmetric triangle, which broke to the upside. Now remember, I do not believe in the methodology that says a break of a symmetric triangle to the upside will take it to the high of the start of the declining line. Or if it breaks down, it takes it to the low of the decline line. I think it's just short term. What it says, it's broken out. That's very important. Now the trend line that it broke becomes support. To me, that's all it is. So that's the IWM. So under 124, kind of negative. It's really 123.70 gets very negative. But in the meantime, it's holding well. And we've got a break coming up. We'll continue with this. Hey, I'd love to take some calls at 877-927-6648. Isn't this the time to be calling when stocks that you're looking at are starting to deteriorate in quality? I'll be right back.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they have just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. And got the Dow down 90, S&P's down 9. We've got Ben in Tallahassee. Ben, how are you?
Very good, Basil. How are you?
Very well, thank you.
Great. Well, I'm wondering if I should test my patience out here, or if I should pull the trigger. I'm looking at playing the UVXY, but I'm looking at the DIA in trough. I think it's very close to trough D, right?
It's made a trough C, and that trough C is at 179.27. And the low today so far on the Dow Diamonds is, where did it go to? It's right here. I was trying to avoid moving that. 179.52. So it's missed it by about 18 cents or something like 17 cents.
Yeah.
So
once you get to that trough T, then we should be expecting at least a little bit of a bounce in the daily then, right?
Well, let's do this. Let's just look at the UVXY. And that is, I mentioned yesterday that I was beginning to see for the very first time in quite a while action that seemed to suggest to me that fund managers were for the first time buying some insurance in the VIX index. So let me pull up the VIX itself. That's the core. And the VIX trading right now at 1452, up 86 cents, is reflecting at 6.15% a greater degree of decline than just the -80 in the Dow, -8 in the S&P and the New York Stock Exchange. I don't have it right now. But most importantly, what it is saying is that because there is a premium being built into the VIX, as I said. Now, remember this, these are vehicles that are trading on, they are kind of removed from the core position. In other words, you are trading the discrepancy or the divergence or the premium or lack of premium based on the futures, and therefore it's a couple of steps away from the original. So the VIX is really an oscillator. As Dave White had said the other day, it's between 24 and 36 days of the out-of-the-money puts and calls on the S&P. So when I'm looking at this, the way I interpret it is I interpret it as it is in relation to where it's been at other times when the price of whatever I'm following, in this case the Dow and the S&P, have been around about this area. And for the first time, I am beginning to see action that says that fund managers are becoming a little bit nervous about the market. They weren't up until now, but now they're starting to show some nervousness. And as a result, they've started to buy some protection. And that's the only way I can interpret it. Now, that's not scientific. It's not mathematical. It's got nothing to do other than my visual representation of what I'm looking at here, with the retest of the peak D in the 120-minute chart that was made just the other day at on the 2nd at 1505, and the high today is 1493, and yet the market isn't close to being as low as it was. That's number one. Number two is the 9-period moving average is at 1377 on the VIX, and it's trading at 1451. That's quite a bit of a premium. And the 200-period moving average, the line I always called the magnet line, is at 1468. And that's suggesting that because we went over yesterday's candle high of 1420, that there is some buying pressure. That's number one. Now let's look at the weekly chart. The way I'm looking at it now, Ben, I would not advise you to do anything unless I saw something in the weekly chart with 1 day to go. Now, we know, we've been there so many times where with 1 day to go, there's been this reversal in the market from being weak to strong. And the next thing is the VIX index, the volatility index, CBOE volatility index, trading at 1454, up 88 cents right now, suddenly reverses down and goes under the 9-period moving average of the monthly chart, which is at 1351.
Yeah. And that's what concerns me with it. As soon as that DIA goes under the 179.27 or whatever that is, it's in trough D, you could expect a little whipsaw to the upside again, right?
Now, okay, I agree with the concept, and I agree with our historical perspective, because when you get to the trough Ds, like you get to the peak Ds, you can expect something to happen that might be a change of trend. I have a different opinion right now, so let me explain it to you. Yeah. Can you hold on?
I can a little bit, yep.
Okay, good. I'll straight when you get back, I'll give you the answer to what I'm looking at. I'll be right back. Dow's down 100.
It's hard to believe that it's been almost 2 years since Andy Hecht started his newsletter, The Technomental Commodity Report. In that time, he's delivered many winning trades for his subscribers. To commemorate Andy's 100th weekly issue of his newsletter, we're rolling back the monthly price to the introductory rate of only $59. This is a one-of-a-kind special that is only around until Thursday of this week, which is the day of his 100th issue. By taking advantage of this 100th issue special, you can lock in Andy's original introductory rate for as long as you remain a subscriber. That's an incredible 25% savings every month off the retail price. Andy delivers in-depth analysis of the commodity market every Thursday in each issue of the Technomental Commodity Report, while providing specific trading recommendations on ETFs and option positions within the commodity market. Don't miss out on this special, as there are only hours remaining. Sign up for the Technomental Commodity Report right now at the front page of TFNN.com.
trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, we're back. Dow's down 115, S&P's down 12 on the 4th day of June. And I just wanted to go to something here. I just got an email from Mike, and Mike says, UVXY should not be traded, in my opinion. This is a very poorly constructed ETF, which favors the second-month VX futures, which is less volatile than the VIX, only for about 10 days per month. Does it only 10 days a month? Does it favor the front-month VX contract? It does not track the VIX very well at all. Now, for my subscribers, we actually are in a position right now where we are long and up about 3% or on the trade of a particular VIX instrument. It is junk. I know it's junk, but if you're able to time this correctly, and so far yes, but who knows, by the end of the day, it can give you really nice percentage gains. And I don't really care what it is, as long as it does what it's supposed to do for me. And the timing is.
I've traded the UVXY several times, and what you find is that you got to get the several consecutive days of the trend.
Correct.
So my thinking was, if I can get 2 or 3 days of the proper trend, then it's worth it. Otherwise, I'll step aside.
So look, this is what I wanted to say to you. As long as we understand that you've got a terrible instrument which is a fantastic instrument. When it works, you turn around and say, oh my God, it's up 30% in 2 days,
Right.
3 days. That's the way it works, but it can just as easily pull back. So here's my recommendation. I believe that we're beginning to see the bearish connotations in the market that I've been talking about for so long. The trading band has kept it confined, but the moment that volatility index, the VIX itself, which is trading at this point at 14.77. The moment it can hold on a closing basis above 15.80, the moment it can trade for 2 consecutive days in the 16s, you will see that volatility index give you fabulous profits. So I know that you're watching it closely. I know that you're able to put stops, etc. So you asked me about the UVXY, which is trading at 41.40, 41.46, 48. I'm going to suggest that because you're watching it, you're a candidate to be able to trade it. I would actually take it because this, if ever it's going to work, it's going to work right now. And I would not give it much of it's trading at 41.50. I would even give it a 1.20 stop. And I'd have it not as a trading stop, just a 1.20 stop. But if it gets to 42.30 by today or tomorrow, then what I would say to you is your entry price, I'd be very strict. I'd try to keep my stop maybe 50 cents below my entry price, not much more than that. Why? Because if the market once again suddenly turns around because of Greece or whatever it is, it could be quite violent. But as a position that says the market is beginning to show the signs that we were looking for of deterioration in leadership, and that it is just sporadic, isolated stocks that are carrying the market higher on each rally. That's why it failed yesterday. That's why it's failing today. Then I'm going to suggest to you, yes, the UVXY is a trade, and it is, as a realist says in the den, it is an intraday trading vehicle, but we know that as soon as it starts to pick up momentum to the direction that it is trading in this case, you want it to be up, you want it to close on any 120-minute basis above 43 in the next 2 days. The moment it starts doing that, you're going to have a big acceleration. So
Okay,
you understand it's almost like a 1 to 3 risk reward if it works for you.
Good. Now, the reason I bring in the DIA into the mix, and I think the reason why you're saying this could be different this time, is that when it gets into trough D, that at that point in time, the weekly may dominate the daily, and the daily could be a moot point. Is that accurate?
Because the tide in the weekly chart will be suggesting that 9-period moving average in the diamonds of 180.33 is really strong resistance, especially if it starts to go through the D and any rally actually fails within a day and it actually makes a lower low. But the MACD is very poor right now, and the stochastics at 25%. It has the 120-minute chart had a sense that it could make an H pattern, which it's done. It could make another H pattern. I don't see much more than that. This is the time. This is the time right now. You know that your risk reward is, you know exactly where the positions are at this point. If the diamonds start to trade above 181.50, they're at 179.54 right now. 181. That's 2 points higher at any stage in the next 2-3 days. You're just stuck in a trading range that's going to continue to be frustrating. I think we're coming out of that trading range right now.
Good. Thanks a lot, Basil.
And thanks for bringing it up. And you understand exactly what I'm talking about. Junk, it's a junk medium, but sometimes you want to go and have for dessert, you want to have junk. It's just that one time. This is the time that you want to trade it. Thank you for calling, Ben. I appreciate that. Okay, folks, this is a very important time. Why is it an important time? For 2 reasons. If I go to, right here, if I go to the intraday work, I have a technique that I call the Chapman Wave Trend Gauge. It hit 2.30 earlier this morning. The suggestion always is that anything above a certain level indicates that within 2 days, you should get a very sharp move to the upside of 7 to 9 points at least in the S&P futures, which should translate into the cash index. We've already seen that. We saw that this morning we opened down sharply and then had a rally to plus in the Dow. I don't know whether it's used it up or not. All I can say is that this particular index has an accuracy rate in the 96, 97% area or higher. So that puts me in a quandary, because I've seen before that if it happens intraday, it can happen from the moment that it hits that level. If it starts to come back and you get the S&P futures, you might have used up. And that's the reason why I was saying to Ben, we might see that this is the perfect time. If ever there was an opportunity, you're on the cusp of breaking the Dow's dashed red up channel and inside track last support line. So obviously, if you break and close underneath it, that's not good, because former support becomes resistance, number one. Number two, the MACD and the histogram of the MACD, those little vertical lines, are very negative. Minus 30 in the histogram. MACD is still expanding. Days young. We're looking at a daily chart. I'm only saying that as of right now, just over 2 hours into the trading day, that's what I'm looking at. It's not the close. The close could see us reverse once again. I don't think so. I think we've kind of used up that that boat sailed, maybe. All right. But the stochastic's making a little W formation. And from a W formation, you can get a reversal to the upside. I have to grab the 120-minute chart. Well, what does the 120-minute chart say? 120-minute chart says the MACD and stochastic are actually quite poor. Histogram went back to negative. It made the arch with a larger arch formation. Let me do the second arch right here. Right there. What's the rule of the left side low bar in the Chapman wave lowercase h methodology? The rule is, if you break the left side low, which it did there, you have one bar in which to reverse back up. And if you reverse back up, you want to be able to close decisively above the left side arch, in this case in the Dow Diamonds. It's at 181.15. Well, lo and behold, it goes all the way to 181.74. Peak B becomes peak B minus because it's dropped so far. And it hasn't taken out the 179.27 low bar. If it now takes that out in this arch formation, it has one bar, maximum two, to get right back to close above the 179.27 level. So that's the way this works. See, the 200-period moving average was support, was resistance, was support. Now it's resistance again, and that is at 180.26 on the Dow Diamonds. So if ever there was an opportunity, this is it, for the Dow to have another spiral to the upside, up 56 points or something like that, to get to back into the 18,010 area. We'll see. It's getting harder and harder. You can't keep on with these failure patterns thinking that's building strength. It's not building strength yet. But we have used up time, and time's very important. Now, I want to go through other indexes. So that was that. Now, the New York Stock Exchange. We all look at the New York Stock Exchange more as a benchmark than anything else, because you can't actually trade it. I don't even know what the vehicle is that would trade it. I always look for it. Haven't found it. Look, that's negative. It's almost touching the low of 4 days ago. 1, 2, 3, 4, yep, of 11.023. And today's low is 11.025. Wow, it's almost there. And look, there's a peak D with a failure pattern unfolding at this time in the weekly chart with a close below the 9-period moving average last week. But we've got a whole day to go, day and a half to go, to see if 11.094 is the magnet and can go above that, or if you're going to go below into that candle, below 10,000. Let's call it a close below 11,000 in the next day or two would be negative. All right. And there's the monthly. I don't want to get into the monthly right now because it's a monthly chart. I've got to wait. Other than to say right now, it is neutral. It's not great. You see, if I move this away, you'll see the MACD is way down there. The divergences I'm looking at here are not repairable in a minute. They're not repairable in a day. Probably to take a week or more of really good action above 11,300 in the New York Stock Exchange. Unlike what I'm seeing right now, although the stochastic's at 85%, to me, the big move, you see that green line, that's really the line that trades in relationship to the price of what it's following. When there's a big divergence in the green line, the green, that's the 9-period differential of the MACD. starts to deteriorate like that and the price holds up, it's only a matter of time before you get that move to the downside. Now, Larry showed a great chart today, he showed it the other day. I borrowed it. I took it the other day for my subscribers. I wanted to show it. It's so important. Well, it's important in the sense that it gives you information, but it doesn't give you information of that day. What it says is, if I can find it here, let me move this away here. Okay, this is the chart right here. Click. And it's a chart that he showed. Oops, not this chart. That's Tom's chart. This is our chart right there. Of the New York Stock Exchange investor credit and the market. Well, look at the deepness. That was the other chart. Did I get rid of that? Oh, that was a mistake. It's this chart here which shows the S&P going up. It shows the credit going down. And at some point, you're going to get a reversal that really is sharp down here in the S&P and up here in the credit. But that usually comes at a climactic moment, number one. Number two is it doesn't really give you the timing. It just says, hey, this is something to follow. You can have a divergence. You can have this. Oh, there it is. This is the chart I already wanted. New York Stock Exchange margin debt and the S&P 500. This is from dshort.com. DSHORT.com. I was recommending someone emailed me just the other day to look at it for a different reason. So this is really important. Look at that. It doesn't tell you exactly when. It says we're getting real close to some kind of a reversal in the S&P. I happen to think that the reversal at this point, using up so much time, is going to be quite sharp, but I'm of the opinion that we have not seen the major top in this market. It is going to come. It's going to come when we least expect it. It's going to come when California and all these states and cities have decided that the $15 minimum wage is the rule. And here they are stuck in the exact chart that you're looking at here with price going high and technicals going lower. That's going to be the same thing where the economy is so poor that you cannot get $15 an hour. I don't know how they're ever going to make that for small businesses. Maybe big businesses can do it. As much as we'd all like to see everyone earning a minimum wage. Wow, I don't know how you're going to do it, especially if we get another phase of bad economic news, and I mean really bad. And that, I think, is later on. And I don't want to get into it now because I'm waiting for the summer to get into it. It has to do with the presidential cycles and things like that. Has to do with President Obama. It has to do with a bunch of things. So I don't want to get into that now because it's not relevant right now. But I think it's going to be relevant for, just like Clinton handed Bush the worst recession. That was the worst recession in 1992. Well, I think it was 1992. And nobody ever spoke about the top in 1990 to 2000, where the Dow had already topped in January, and the S&P and the SOX index and the high-techs topped in March. That was the top. And nobody ever said, I mean, the press didn't say Bush inherited a bear market, just like they said Obama inherited a bear market, which of course he did. So the ironies of this I'll get into later in the summer. There's just no need to get into it now. So going back to what I was looking at, the New York Stock Exchange is suggesting by this inverted Roman candle that we're looking at right now, that if there is a close below the low of today, you've got to be careful. You could get a bounce early on Monday, Tuesday, but it is not a good sign because it's going to deteriorate the weekly chart. So I'm looking at this as scans saying, wow, where could the strength come from? I'll be right back for the last segment of the show. Be right back. Basil Chapman, Tiger Business Hour. Dow's down 133.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. The Futures Hour, next on TFNN.
Hi, folks. We're back. Dow's down 127, S&P's down 13. And I want to go through a couple of things. I had a question from Sandy saying he wanted to know about FEYE. We were talking about it the other day. FireEye has had a spectacular move. It's gone from the under 40 to over 49. I hit 49.69 this morning. Leg E in the daily. 120-minute chart, peak F being formed right now. Leg D in the weekly. I'm going to make a suggestion, Sandy, that if you're looking to buy, I'm going to say to you that right at this particular moment, if you're long, let me double check. I don't want to do this too quickly, hastily here. Yep. If you were long, I would recommend taking a little bit off right now. No, I'd recommend taking off half at least and raise the stop on your core position. Why? Because it's had a spectacular move. The candle that's just formed in the 120-minute chart suggests, yes, it could go a little bit higher. Maybe it could touch 50, but the chances are of giving 2 to 3 points back is greater at this, my opinion. is greater at this particular point with the 46.49 9-period moving average. 45.61 is the next moving average. That's the kind of support into the 44.80 area that it could take on a pullback. So no, I would actually not be buying it now. I think the market, right as we're speaking, is probably at its most vulnerable. That doesn't mean vulnerable, meaning that it's sensitive to a move up or down. My bias right now is to think it's going to be a move down. And therefore, if you want my opinion, I would not be looking to buy this. I'd give it at least 3 to 4 days before I'd even consider. Send me an email tomorrow, next week, Tuesday or Wednesday, and let's look at it again. My guess is that at that particular time, it will be between 46 and 44. And that's the way I'd be looking at it. So I'd be recommending taking some off right now. If you are playing options, I would take a chunk off right now. I'd keep a little bit by because it's still one of the sexy stocks that fund managers want to go to. I think the move right now is not done, but at least on the short term, I think the upside is very limited. Downside is going to be oh, Terry just said, just sold second half of FEY. Congratulations, Terry. I know you had an absolutely fabulous Terry in the den. A fantastic trade. Congratulations. You'll always be able to get this again. Now, here's what I want to look at because we've got just a moment to go. And don't forget, you got Andy Hecht. He's got this is his 100th anniversary newsletter. Please check it out. He's really just a fabulous fundamental and technical analyst. So let's just look at what we want to look at here is the VIX index. VIX is trading now at 1487. I always say the day is young. In fact, we know that the day is young right up until 3:55, 5 minutes before the final bell, because things can happen, especially in this kind of market. My looking at this is that the weekly chart is giving me the first signal for a long time that there is technical strength behind this move. If there is technical strength, it means that 1480 is where it is. 1356, the 1350s is going to be very support between now and tomorrow. And that's number one. Number two is that if there is a break to the upside, the level that most fund managers would have on their screen is this one right here, which is, let me just double check before I talk about it. Yeah, it's the 200-period simple moving average at 1518. Mine is the exponential right here at 14, I think, whatever it was, 1456, and 1468. So it's going to go above 1505 to start leg B in the daily. This is the first time that we're seeing, I spoke about it yesterday. This is the first time we're starting to see legs to the upside in the VIX index. That means that fund managers, regardless of quite what the market's doing, fund managers and hedge fund managers are starting to buy some insurance, and that's what you want. So all I can say is I do think that the VIX index is absolutely key right now. Any close into the low 15s would suggest that this market should have a lousy Friday. We never know. All right. Stay tuned, because great shows coming up, and I will be back this afternoon.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.